schools is not what they need. And listener says, I've just come from the ploughing championships. There was not one stand of healthy, nutritious food there at the ploughing championships. Former IFA president Joe Healy joins us now. Joe is actually also the chairman or chairperson of Cultivate, the credit union which supplies the farming sector. Joe, thank you very much for joining us. It must be a beautiful sunny day down there at the ploughing, if it's anything like Dublin, is it?
Absolutely incredible, Matt. You'll have to make your way down here over the next 2 days. It is brilliant weather, so we're all grateful for that.
And is it putting everyone in good cheer and they all spending loads of money?
Well, it's putting everyone in good cheer anyway. Yeah, you know, I think no matter what, a few fine days is worth anything to the mindset of people.
Indeed. Now, you actually have overseen at Cultivate Credit Union quite an expansion on the amount of lending to farmers. Tell us a little bit about this. Why are farmers borrowing more money? Is it because they have needs to cover costs, or is it to invest in expansion?
Yeah, Matt, I think the appetite was always there. Look, I was president of Macro back in the 90s, and access to finance was a key issue for farmers. I was president of the IFA 25 years later, and access to finance was still one of the key issues at any of the meetings. And there was an EU-funded study done in 2018, and it was about the finance market in the agri sector in Ireland, and it found that there was a shortfall in that market of between 800 million and a billion. And to put that into perspective, Matt, total annual borrowings by Irish farmers is give or take around 700 million. So there was over a million's total borrowing of a shortfall in the market. So I was, as I said, president of IFA at the time, and I met with a number of credit unions in Galway, and it was to come up with a loan package that would be simple, accessible and flexible for farmers. So that was developed, and it has spiraled since then. And you know, at the moment there's 175 outlets around the country where farmers can access finance from credit unions through Cultivate.
Okay, and what are the criteria, though, for actually being able to get loans? Because I suppose it is fair to say, isn't it, that farming income can be very uncertain?
Yeah, well, look, one of the major criteria, you know, for loans over the years has been repayment capacity, and we operate a visualised system, and, you know, it's very quick, and it's, if I'm a farmer and if I go into my local credit union, they have this visualised system. If I give them permission to work directly with my accountant or my agri consultant, they can do that. So it cuts me out of the equation, so things aren't put off on the long finger. And that's why there is a 93% approval rating for the loan applications. And, you know, from once all paperwork is in order, loans are generally approved within a week of that final paperwork being put in order.
I'm very interested in both something that your review has identified, that 80% of the farmers who've borrowed from you had an off-farm income in the first half of this year. 88% of beef farmers had an off-farm income, 52% of dairy farmers. Can you define for me what an off-farm income is, please?
Well, an off-farm income is that the farmer or the spouse is working as an off-farm job, and there's off-farm, I suppose, income coming into the house. And look, those figures, while we have them down there, and rightly so, for our loans, I think that would be general of Irish farmers at this stage anyways. There is an off-farm income coming into most farmers' houses at this stage.
Is it possible to survive as a farmer without an off-farm income?
Well, it would put a lot more pressure, and maybe the family wouldn't be able to survive in as kind of with the standard of living that they'd want to survive at if they hadn't that off-farm income. So it does help. But look, in most houses, inside and outside farming, like second income is not unusual in any sector.
Indeed, it isn't, I suppose. But and how sizable might the off-farm income have to be as against and does it provide a degree of certainty that the farm income doesn't have?
Without a doubt, because all those things are taken into account. You know, when I as a farmer go in to meet my lending officer from the local credit union, you know, all the income and expenditure of the house and the accounts for the last few years are taken into account. So, of course, it helps that, and it helps cash flow within the family farm as well. But, you know, I've mentioned there that as a farmer, and it probably goes back to your earlier question, it's, you know, in relation to why the growth, I think it's the focus that Cultivate credit unions have in relation to farmer-friendly finance and the quick turnaround. Look, I've said I'm a farmer myself. If I'm looking for finance, a few things that I really go after, Matt, is something that's local, that's quick, that's simple, that's personal and that's flexible. And the credit unions are lucky in the sense that they tick all those boxes. And I think that's backed up year in, year out by the CXI survey with over 150 companies and organisations. And since they started doing that, and it measures the satisfaction and trust of the customer with the organisation, and the credit unions have won that every year in the 9 years that it has been operating, and last year was the highest mark ever that we got. So, it's all about customer satisfaction.
Joe Healy from Cultivate, thank you for joining us. Enjoy the rest of the ploughing championships. Hope the weather will keep up for the next couple of days as well as it did today. We have Cal Thomas in studio.